Welcome to the Compliance Resource Channel. Compliance Resource is a source of compliance assistance for financial institutions across the country. In this video, our Director of Compliance, Robin Cooper, is going to cover a Q&A related to flood insurance.
Hi, thanks for joining us. Today we're looking at a Q&A that we have received related to flood insurance. If you'd like to take a look at this Q&A or others, please visit our community forum at jaxcomplianceresource.com. Once you're there, click on Free Services and then scroll down to Community Forum. Now again, this question that we are looking at today is pertaining to flood insurance and cross-collateralization clauses. And this question has multiple parts, so we're going to break it up and address each part individually. The first part of the question asks, both our commercial and consumer deeds of trust include cross-collateralization clauses. How does this impact flood insurance? Well, this can impact flood insurance in various ways. First of all, it could impact the amount of coverage you're required to have. It could also impact whether you need to provide a new special flood hazard area notice, as well as perhaps pulling a new determination if the initial loan that is secured by that property in a flood zone was the determination was on a form that was not a standard flood hazard determination form, or if it's more than 7 years old, or if there's been a map change, then you would need to pull a new determination. It could also trigger flood escrow requirements as well. For example, if that initial loan that is secured by the property in a flood zone was made prior to that January 1st, 2016 date when those escrow requirements went into effect, and that loan doesn't have an escrow attached for flood insurance, then this new loan could trigger the escrow requirements since it would be making, increasing, renewing, or extending a loan secured by a property in a flood zone. So those are all things to keep in mind as we go through this question. The second part of the question is, would all loan balances to the borrower need to be included when determining the amount of flood insurance coverage needed for the improved property located in a special flood hazard area? And the answer to that is yes, that you would need to consider the balance of any loans that are secured by the flood property directly or through a cross-collateralization clause. Now, generally, when we are calculating flood insurance coverage, that we are looking at the lesser of the outstanding principal balance of the loan, the insurable value of the improved property, or the maximum amount of insurance available for that type of property through the NFIP. Now, if you have, or if your financial institution utilizes cross-collateralization clauses, and assuming there is no exception to this clause for flood properties, then you would need to include the outstanding principal balance of all loans secured by that property that's in a flood zone, including those that are secured through the cross-collateralization clause as well. Now, the next part of the question asks, would a flood notice be required for the new loan secured by the property in a special flood hazard area and all subsequent loans to the customer as long as the property located in a special flood hazard area is collateral for any loan? And the answer again is yes, if the loan is cross-collateralized, which results in the loan being secured by a property in a flood zone, then you would need to provide that special flood hazard area notice even if the property is not directly secured by the property in the flood zone, meaning that it's secured through a cross-collateralization clause. And what the regulation says is that when you make, increase, renew, or extend a loan secured by a dwelling or a mobile home that is located or to be located in a special flood hazard area, that you need to provide that notice. And finally, the last part of the question asks, does anyone know how examiners have been looking at this? And we haven't heard much about this from bankers. We also haven't heard much about this from examiners, but we do see that there has been some discussion from examiners. We've found some documents that address cross-collateralization clauses as it pertains to flood insurance, and we've also heard from bankers in the past that have had issues with this as it pertains to flood insurance. So it probably depends on the examiner that's coming into your financial institution. Is this something that they're accustomed to looking at, as to whether or not this is something that they're going to ask you about and dig deeper into. But I do suggest if you offer or if you do utilize cross-collateralization clauses at your financial institution, that you take a deeper look at this and look at how it could impact your flood insurance requirements, and perhaps make adjustments if you need to. Just the best resource that we have found from the regulators on this is the FDIC, and they offer through their website director training videos. One of those videos pertaining to flood insurance addresses common violations and consequences, and they do talk about the cross-collateralization clause and that issue as it pertains to flood insurance. So you might take a look at that on the FDIC's website, and it would give you more insight as well. I hope this has been a helpful question or helpful Q&A for you. Again, if you'd like to visit our website and view other Q&As, please do so by visiting us at jackscomplianceresource.com. Once you're there, click on Free Services and then scroll down to Community Forum. Thanks for joining us.